5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey, what's up, y'all? This is Andrew from the Options Millionaire community with another video from the Options Trading How-To series. Going over everything from the most basic of options trading strategies to the most advanced and everything in between. In this video, we're going to be talking about the best trading indicator, the market itself. One of my biggest pet peeves about seeing a new trader, or any trader for that matter, who is trading in the market, is them basing their entire system on indicators. I ask people, hey, what's your system? What do you do for trading? Like, how do you develop a trade? And it's all RSI, MACD, Bollinger Bands, moving average, blah, 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 garbage. First and foremost in your strategy needs to be the market. Then, after you know how to read the market, after you know how to anticipate movement based on market direction and market sentiment, then you can start incorporating some technical indicators on the back end to kind of tidy up or really fine tune a few things. But if your first and foremost flagship is technical indicators, you're going to be let down 100% of the time. That is why if you Google right now, what is the best technical indicator, you're going to get a list of 1,000 different technical indicators. If you go onto YouTube and Google, what is the best technical indicator? You're going to get 1,000 different videos for 1,000 different technical indicators, and they're all going to be garbage. A long time ago, I realized that if I wanted to make big boy money, I needed to learn to trade like the big boys. After reading, being mentored, countless hours of resources and years of failures and successes and research, I figured out that you have to learn to read the market if you want to learn to be profitable. That's great, grand, and wonderful, you may ask, but how do you read the market? What is market awareness? Well, I'm glad you asked. Let's dive in. So I'm going to categorize my outlook for market awareness into 5 different categories, listed from most importance to least importance. Number 1, a watch list. Number 2, volume or volume price analysis. 3, open interest. 4, a tool on which to measure gamma, which I use spot gamma. And 5 is news. So let's start out with the watch list. By the way, nice, sexy red candle here on the daily. Can't wait for this week. So I think the watch list is one of the number one underutilized tools that traders use. I think a lot of people use it to kind of throw a bunch of stuff on there that they see around the Twitter sphere or Reddit, or kind of like a new hot stock they want to throw on there. So just throw it in the watch list. However, me, I like being a little more intentional with my watch list. I actually use it as a tool, and I wanted to use it to have a litmus test of the market of sorts. I want to be able to look at my watch list at any given second and immediately know what the overall sentiment or gauge is of the market at any given moment. So having said that, I've divided my watch list up into 3 sections: the top SPY holdings, the top sectors of SPY, and I call it the meat and potatoes, which is basically the most things I click on during the day. The top one, top SPY holdings, is the top 10. I just updated top 10 holdings of SPY, and this is ranked in greatest to least. So Apple's up top, all the way down JP Morgan, and they are weighted like this. And I think that's obvious, like why I do this. I want to be able to have the biggest hitters in SPY kind of tell me what's going on. If I see Apple, Microsoft, Amazon, the top 3 holdings start to tank, I can anticipate some downward movement in SPY. Just gives me a good overall outlook of how the big hitters in SPY are moving. Coming on down there, it's the same concept. I have these sectors of SPY ranked in greatest to least, technology being the top one and the utilities being on the bottom one, and they are allocated like this: 28.79% on info technology, and then 2.38% on utilities, and everything in between. These do adjust. They're not set in stone, so I go in every few weeks and I adjust these to make sure that I've got them correlated properly. And then down here, meat and potatoes, this is the stuff I use every day. I've got SPY, SPX down here, as well as QQQ, which is probably the number 2 thing I focus on. The VIX, which is incredible. I think I'm a big believer on monitoring the VIX. In fact, it's probably my top ticker on the watch list. If you can monitor the VIX, which is the volatility index for the S&P 500, if you can monitor the VIX, you can kind of start to anticipate moves to the upside and downside as long as you're doing that proper analysis. Below that, I've got bonds. It's a good year to monitor the bond movement in the market. NASDAQ futures, the S&P futures, and then the TNX, which are the 10-year rates down here. It's a good baseline for the tools that I use at any given time, so I can quickly adjust, click through, and figure out what the market is doing at every given moment. I'm very proud of this watch list. It's a very intentional, with the key word on intentional. It's a very intentional watch list that I use, that I've built to really focus on the key dynamics that it is makes up my system to gauge an entry and or exit in a position. All right, number 2 is volume or volume price analysis. I'm a big believer of Anna Colling's book, Complete Guide to Volume Price Analysis. It looks like this right here. By the way, you can pick up a copy of it if you go down there and click on my merch store, theoptionsmillionaire.com. Links down in the description. Go pick up a copy. I think it's a game changer in terms of reading volume and anticipating movement in the market itself. Fantastic book. One of my top reads that I recommend to all my followers. So volume price analysis, volume is actually reading the volume in the market to determine what you're doing. If there's no volume in the movement, or if you can monitor what the big money is putting in there, massive fluctuations of volume. You can kind of figure out what the market's doing, how it's going about it, and the strength on which the move is being made. Having said that, I monitor volume by a few different ways. One is the volume at price indicator right here, and I just turn that one on. It looks like this. It's got the gray horizontal histogram right here, and you can monitor volume at price. And I have a whole video on how to go about this one particular indicator. It's that important to me. It looks like this, and link is also down in the description, so go take a look at that. Second is going to be the obvious, the volume candles themselves down here. I think everybody sees those. I think it's the default indicator on all trading formats is the red and green volume indicators. Third is going to be my custom SR levels, which look like this. The reason why I say they're volume indicators, one, all they are is just a horizontal line used on TradingView, but I calculate these prices right here based on a lot of different factors, volume mainly, and I plug those numbers in there on which I can anticipate movement around those numbers based on the volume of the market. And last but certainly not least is actual candles themselves. The price action of the candles. Candle reading is very important. You can figure out bullish candles, bearish candles, the depth, the breadth. You start bringing that all into play reading the candles as well as the other things. You can get a good overarching view of the volume of the market, anticipate movement. Number 3, open interest. Very important, but very simple as well. So I use two methods to monitor open interest. The first is on my actual E-Trade. So this is the E-Trade options chain right here. As you can see, there's a category labeled open interest, which is right here. This is for the calls and this is for the puts. What I'm looking for here is very large levels of open interest here. For example, right here, 27,000 on the 4,600, and up here you've got 20,000 on the 45.50 puts. There are two ways that I measure open interest. One is on the options chain right here under E-Trade, and number two is using Spot Gamma. And the reason why I love Spot Gamma for this is because Spot Gamma does a great job of summarizing open interest for both calls and puts, and they identify a particular wall that is very heavy on open interest for calls and puts. For example, the past 2 weeks, we've had a very significant open interest level at 4,700 on the SPX with a significant number of calls and puts right at 4,700, which obviously we created a fantastic level on 4,700. Let's go take a look just and kind of give you an example of what I've been looking at here. So 4,700 is right here. We've been bouncing off just above 4,700, right at 4,700 all week long for actually 2 weeks now, 3 weeks now, until we finally rejected. So identify, and there's a whole bunch of factors into that, but there's a great reason why I monitor open interest, because it does a great job of identifying key levels and support, of resistance as well, which I think is a fantastic reason why everyone should be monitoring open interest. And number 4 is find a tool to use to measure gamma. I personally use Spot Gamma. Spot Gamma is a fantastic tool on which you can really start to focus on the different levels of gamma as well as open interest. It's a double-sided tool. Well, it's actually a multifaceted tool, but for these two instances, gamma and open interest. You can kind of see here, for example, it shows very large strikes for gamma levels. And I'm not going to go too far in depth in this because of a prior video, I did a big video on this as well. But I use this tool. It's a fantastic resource that you can use to get a huge market awareness and market data created by Brent and Matt, the founders of Spot Gamma. Fantastic dudes, awesome dudes. I've had one-on-one conversations with them, by the way. Awesome, genuine dudes, and they're very transparent and awesome product. So highly recommend Spot Gamma. It does a fantastic job in organizing all the gamma data as well as an open interest. You can look at the Vanna models, you can look at the Delta models, all this stuff to really focus on diving down particular levels that you really need to focus on to make your trades and exit your trades. Number 5 on the list, and I think the least important one on the list, is going to be news. In my opinion, 95% of all news is irrelevant or not related to a particular move in the market. Yet, most of the time, when I see a move being made on the intraday or on the daily or on the minute or on the yearly, whenever I see a move being made, the first thing I see asked on Reddit, Twitter, Discord, whatever it is in any community is, what's the news? What news is moving this? Give me the link. I need the link. Link. Come on, give it to me. Give me the link. It's all about the news. And I know why. It's because it's low-hanging fruit. It's the first thing people think of. They don't want to do the analysis, or they don't know how to do the analysis on the behind the scenes, the volume, whatever drives the market. So they think any move that's being made outside of a little tight chop is going to be a news-driven event. When about most of the time, my guess 95% of the time, that's not the case. The move being made is going to be a data-driven event, not a news-driven event. However, having said all that, I do monitor I do monitor news. I think it's very important to do that kind of analysis. And every single morning when I sit down at the computer, one of the things I take into account is news events, mainly because I want to be apprised of all news. And what do I use for that? Is Bloomberg News right here. I think it's a fantastic resource. They do a great job cutting out the crap and really going towards a data-driven interface that's not necessarily biased. I know a lot of different news outlets out there are very biased to one side of the aisle or the other, and they bring in a lot of political bias, which kind of taints the news, and I don't like to deal with that. So Bloomberg does a great job of cutting all that out. Not to mention, they do a great job of monitoring global news, so Europe, Asia, Australia, etc., etc. I can get a litmus test of the entire global market early in the morning, in addition to the United States market, so I can bring in a whole litmus test of the entire news outlet. In addition, it helps me be apprised of any kind of news events going on during the day. For example, if Jay Powell's speaking that day, I want to know exactly what time he's talking so I can anticipate the run-up of volatility and the volatile move as he's talking. So any kind of news events during the day, I want to know what time it's happening and notate all that stuff so I can be prepared as the responsible trader that I am for any kind of potential moves in the market. So there you have it. That is the 5 categories that make up being a market-aware trader. Now, what does being a market-aware actually mean? It means being able to anticipate movement to a certain degree. Obviously, we don't have a crystal ball. I wish we did, but it's the closest thing to it. Understanding the market will help you do a lot of things. 1, understand movements and why they're being made. Number 2, it helps you remove the big miss. I'm a big believer that if you can remove the probability of a losing trade, you can start becoming more and more consistent. Another reason I want to be market aware is to identify trend changes. For example, if we're in a very bullish market, yet all of a sudden I start to see a lot of red creeping in. If I start to see this watch list go bright red, then I know that there's going to be a potential trend change, and that's going to drive me to start looking at all the technical data, all the volume analysis, all the open interest to figure out what's going on in the market. Being market aware will help you jump the gun and get ahead of potential moves in advance. Anyway, y'all, that's all I got for you. Thanks for watching this video. I am Andrew, again with the Options Millionaire community, and this has been a how-to series video. Be on the lookout for more how-to videos coming out this fall and in the winter. As it gets colder outside, it's going to get hotter inside. Watching all these trading videos and learning how to make more money. Head on over to the Options Millionaire store, merch store. I've got hoodies, more shirts coming out, as well as links to all of my educational resources that I learned over the past 10 plus years of becoming a trader, all the reading materials, etc., that you could use to sharpen your edges. So head on over there and pick out a few books that will help you. If you want to be a part of a great educational resource, come over, use the link down there in the description to join the Discord, join the Patreon. We're an educational based server that's not focused on play calling, so you can come in there, have a communal learning environment where we learn together, grow together, and gain our edge. Hit that like and subscribe button. If you're new to the channel, come join us on every Monday, Wednesday, Friday as we do live ETF trading every morning, at least until 11 o'clock Eastern time, sometimes longer depending on the volatility. Anyway, that's all I got for you. Thanks for watching this video. Till next time, remember, the only thing separating you from financial greatness is the decision to be better. Until next time, I'm out. See ya.